Well, hi everyone. Welcome to BDO's webinar on JobKeeper 2.0. My name's James Trainor, and I'm a tax partner based in BDO's Sydney practice. The JobKeeper 2.0 is similar to many movie sequels. The original is spectacular and leaves you wanting more, and then along comes the sequel, and well, it's really not quite as good. And so on that somewhat deflationary note, let's remind ourselves a little bit about JobKeeper. So JobKeeper is a huge government support scheme for businesses and employees. There needed to be three things to be eligible for JobKeeper. You needed to be an eligible employer, so you needed to be in business on the 1st of March 2020, and you needed to have a decline in turnover compared to the prior year. You needed an eligible employee, someone who was also employed on the 1st of March, and they needed to satisfy a number of eligibility conditions. And finally, you needed to make an eligible payment. So that means that the employer needed to pay the employee at least $1,500 per fortnight upfront. And then you did all of those things and you nominated, and that made you as an employer eligible to receive a payment from the government of $1,500 per fortnight per eligible employee. Now, this is a huge scheme. The government originally estimated the cost at $130 billion. And then following some adjustments, they overestimated the initial spend. They brought it back to about a $70 billion program, so still a massive program. In the latest government forecast, they're predicting the payments under JobKeeper will be about $85 billion. So that suggests that JobKeeper 2.0 is probably going to deliver maybe another $15 billion worth of payments. So definitely on a smaller scale, which fits with the government's intention of making JobKeeper more targeted to those businesses and those individuals who are most in need. So what are the key changes to JobKeeper? Well, there are four key changes that are happening to JobKeeper. The first is the period. So JobKeeper was originally intended to finish on the 27th of September 2020. It'll now extend for another 6 months through until the 28th of March 2021. Currently, the payment rate, well, there is only one payment rate, and it's $1,500 per fortnight. Going forward from the 28th of September, there'll actually be a lower payment of $1,200, reducing down to $1,000. There's also the introduction of a partial rate. And this is to reflect the fact that as part of the review, the government decided that there were many people who were part-time or casual employees who were actually getting paid more under JobKeeper than they were previously when they were actually working. So the government's introduced a partial rate, which is an even lower rate for those employees who are working part-time. Finally, the decline in turnover is moving from a projected assessment of monthly or quarterly GST turnover, looking to actual amounts of GST turnover, and that's being done on a quarterly basis. So looking first at the additional periods, as I mentioned, the original JobKeeper period was for the 13 fortnights from the 30th of March through until the 27th of September. There's now going to be two additional periods. The first quarter will be from the 28th of September to the 3rd of January 2021, and that will cover the 7 fortnights in that period. And then there'll be a second quarter from the 4th of January 2021 through the 28th of March, and that'll cover those 6 fortnights. And it's important to note that it's not just merely a 6-month extension, but it's actually 2 sort of 3-month extensions because employers will need to reassess their eligibility for each of those subsequent periods. There's a reduction in payments. Currently, under the JobKeeper scheme, all eligible employees receive $1,500 per fortnight. So there's only one flat rate for everyone. Going forward from the 28th of September through until the 3rd of January, the full rate for those employees who are working full-time will decrease to $1,200 per fortnight. And then in the final period from the 4th of January through until the 28th of March 2021, that full rate will decrease to $1,000 per fortnight. As I mentioned before, there's also a partial rate, and we'll have a look at which employees are eligible for the partial and the full rate on the next slide. but the partial rate for those part-time employees will drop to $750 during the first period, and then $650 for the second period from January through until March 2021. So that's a reduction in both the JobKeeper payment that the employer will receive, as well as a reduction in the JobKeeper payment that those employers will receive from the government. From the 28th of September, there'll actually be 2 tiers of payment. And as I mentioned up front, it's trying to split between full-time and part-time employees. So who is going to be eligible for the full rate? Well, if you're an employee, eligibility depends on the number of hours that you worked, or the average number of hours that you worked each week in the 4 weeks of pay periods before the 1st of March 2020. So you need to do an assessment over that period of your employees and work out where they're working more than 20 hours per week on average to be eligible for the full rate. If they weren't, then they will be eligible for the partial rate. There's a slightly different test for eligible business participants. So those are people who are not employees but are running or owning a business. They need to have a look at the month of February 2020 and determine if they are actively engaged in the business for more than 20 hours or more a week on average. As with the case of a lot of things in JobKeeper, the Commissioner will have discretion to set out alternative tests where the February 2020 period, the hours worked during that period were not usual. So that might be that the employee was on leave, volunteering during bushfires, or not employed for all of February 2020. So there will be some other alternative tests that might apply. So the key thing here for employers is they'll actually need to do an assessment back to that period in February 2020 for each of their eligible employees and work out, are they eligible for the full rate or the partial rate. The decline in turnover test, there is a change that's happening with the decline in turnover test. The things that are changing there is that the turnover test periods will be different under the new JobKeeper 2.0. And the way that you calculate GST turnover is modified slightly. What's staying the same? Well, the decline in turnover percentages, they are not changing under JobKeeper 2.0. So the turnover test period. So currently, in order to be eligible for JobKeeper, companies can have a look at their turnover either during any of the months in March to September 2020, and then compare that to the corresponding month between March and September in 2019. Or they can do it on a quarterly basis. So they can look at the June and September quarters, so the periods or the quarters starting on the 1st of April and 1st of July 2020, and look at the corresponding quarters in 2019. And employers only needed to do that once. So once you satisfied it for a particular month, you're eligible for the entire period of JobKeeper. So that eligibility runs through until the 27th of September 2020 if you satisfy the eligibility requirements. Under JobKeeper 2.0, there's actually going to be 2 additional tests that employers will need to do. So the first is a test of your turnover during each of the June and September 2020 quarters. And so that's comparing the decline in turnover during those quarters back to the corresponding quarters in 2019. And it's important to note that you need to have a decline in turnover in each of those quarters, so each of the June and September quarters, in order to qualify for the extended JobKeeper payments in the period from the 28th of September through until the 3rd of January 2021. In order to be eligible for the second period, the employer will need to demonstrate that there's been a decline in turnover in each of the 3 quarters, June, September, and December 2020, and again comparing to the corresponding quarters in 2019. So employers will need to do 2 additional decline in turnover tests to determine if they're eligible for JobKeeper 2.0. The calculation of GST turnover is also changing, although it's this is not completely new in that the government did announce, or the ATO did announce, that under some alternative tests, employers could look to the BAS and use the information contained in the BAS, which is the actual GST turnover, for calculating the decline in turnover. That's now been a little bit more formalised. So just a reminder, under the current arrangements, employers look at their projected GST turnover for the month or quarter, and then compare that to the current GST turnover in the month or quarter in 2019. And what that meant is that employers needed to estimate what the GST turnover would be during that month or quarter, because they were doing it on a prospective basis. Essentially, during the extension quarters, the government wants to look at actuals. So they want to look back a little bit and see, well, did you have an actual decline in turnover during the relevant test quarters, and compare that to the 2019 quarters to see if there's actually been a decline in turnover. So basically what this means is that employers will look to their business activity statements and the information contained in there. Again, the Commissioner will have some discretions to set out some alternative tests for businesses that don't lodge a BAS, and the existing discretions that the Commissioner has in relation to looking at alternative tests where the particular month or quarter doesn't represent the true turnover of the business. Those alternative tests will continue to apply during the extension quarters. Just a comment around some timing issues with the decline in turnover and where employers are looking at the actual information contained in their BAS. The issue here is that the BAS won't need to be filed until after the extension quarter starts. So it makes it a little bit difficult for employers to determine whether they will be eligible, and given they need to pay their employees before the fortnight and they get their payment from the government, they actually need to make some assessments of their turnover earlier than when they might need to lodge their BAS. So if we have a look, the BAS for the June quarter would be lodged on the 21st of October if it's the monthly filer, or the 28th of October in 2020 if they're a quarterly filer, which actually is almost a month after the start date for the extended JobKeeper 2.0. So how do employers deal with that? Two ways. Either employers will need to upfront assess whether they think they will still have a decline in turnover during that period and continue to pay their employees from the 28th of September in order to be eligible. Or the government has announced that the Commissioner will have discretion to extend the time to pay employees to satisfy that wage condition. So it may well be that some employers who aren't quite sure whether they're going to satisfy the decline in turnover test may choose not to pay some of their employees. And obviously that would be employees who have been stood down or who are working reduced hours. But then once they file their BAS and determine their eligibility, then they might need to back pay some of those employees in order to be eligible for JobKeeper from the 28th of September. A similar thing will happen as we move into the second quarter that starts on the 4th of January as well. As I mentioned, there's actually no change to the decline in turnover percentages. So just a reminder, for businesses that have an aggregated turnover of more than $1 billion, the decline in turnover needs to be 50%. If the aggregated turnover is $1 billion or less, then it's 30%. And then for Australian charities, not-for-profit registered charities, excluding schools and universities, the decline in turnover is 15%. And the application of things like government grants and the like, particularly for those charities, that's remaining unchanged as well. So let's turn to an example now that demonstrates what the decline in turnover is required under the retesting in JobKeeper 2.0. So the example we have is Carmen, who owns and runs the City Cafe, and she started claiming JobKeeper from the 30th of March 2020. And at that time, she estimated that in April 2020, that the turnover would be 70% below the turnover during the corresponding period in April 2019. So eligible for JobKeeper payment. And because she satisfied the eligibility in the month of April, she's eligible for the entire period through to the 27th of September. So regardless of whether the decline in turnover continued or not, eligibility right up through to the end of the 27th of September. If we have a look at what happened in the period from April to June, we can see that in that period for the June quarter, the decline in turnover was still substantial. So 72% decline. If we look at the turnover in each of those, or the total for the June quarter of $170,000, and compare that to the corresponding quarter in 2019 of $600,000, 72% decline. So yep, tick the box there, satisfied the decline in turnover for the June quarter. But as I mentioned, in order to remain eligible, Carmen will need to satisfy the test for both quarters. So we also need to look at the quarter that runs from July into September. And during that period, we can see that the total turnover for the September quarter is $400,000 compared to the prior quarter, which remained at $600,000. There's a decline during the September quarter of 33%. So given that the decline in turnover for both of those quarters exceeded 30%, City Cafe is eligible for JobKeeper payments for the period from the 28th of September through until the 3rd of January 2021. If we project forward and that business continues to improve for City Cafe, we're allowed to get out a little bit more, still socially distant, but hopefully not having to wear masks and the like. And then we look at the actual turnover for the September quarter. If that was only 20% less than the December quarter in 2019, City Cafe would no longer be eligible to claim JobKeeper for that second extension period, which starts on the 4th of January. So that eligibility needs to be retested for both of those additional periods. In addition to determining the decline in turnover, Carmen will also need to have a look at each of the eligible employees to determine what's the payment rate that applies. So if we think about her situation, she was working full-time in the cafe throughout February 2020. Then she's eligible for a payment of $1,200 per fortnight for the period from the 28th of September through until the 3rd of January 2021 as an eligible business participant. City Cafe had 3 full-time employees who each worked 20 hours or more during the 4 weeks in February 2020. So for each of those employees, City Cafe is eligible for a $1,200 per fortnight JobKeeper payment. And again, that will run from September through until the 3rd of January 2021. City Cafe had a part-time employee, Chris, who worked different hours every other week. So 14 hours in 1 week and 22 hours in the next week. Now, because the average weekly number of hours is less than 20, Chris is only eligible for the partial payment. So that'll be $750 per fortnight from the period 28th of September through until the 3rd of January. And finally, as things started picking up, City Cafe hired Charles on the 20th of September 2020, and there is no eligibility for JobKeeper payments in respect of Charles because he wasn't an employee of City Cafe on the 1st of March 2020. So some things that don't change in relation to JobKeeper, and that's in relation to employee eligibility. So all the tests that were applied under the original JobKeeper scheme continue to apply under the new scheme. So that is that individual was employed on the 1st of March, their age, they were a full-time employee or casual employee, their residency status, all of those sorts of tests are still the same. and those employees will still need to nominate to participate in the scheme if they haven't already done so. Similarly, there's been no changes to the payment eligibility. So these are the steps that the employer needs to look at in terms of, is the employer eligible? Is the employee eligible? Having to pay the employee prior to the end of the JobKeeper fortnight, subject, of course, to that comment I mentioned before about the ability of the Commissioner to extend the period where employers are still determining their eligibility during the start of each of those subsequent periods. The fortnights will just extend out a little bit more. Employers will still need to provide information to the ATO about their entitlement each fortnight, and there'll be some additional reporting required to tell the ATO about the actual payment rate which applies to each employee. So just following on from that, there are a couple of new requirements for employers. So employers will need to look back to February 2020 and look at the number of hours that either their employees were working in the business or that they were actively engaged, if we're talking about business participants, to determine are they eligible for the full rate or the partial rate. Once they determine that, they'll actually need to nominate the payment rate for those eligible employees or business participants, and that information will need to be provided to the ATO along with all of the other employee information. Employers will also need to do 2 more tests of decline in turnover. And once again, I stress it's for each quarter. So they'll need to test GST turnover in each of the June and September quarters for the first period. And then in each of the 3 quarters, June, September, and December, to determine if they're eligible for JobKeeper for that second period. Finally, just touching on changes to JobSeeker, so not JobKeeper, but JobSeeker program. And although this isn't administered by employers, it's worth just touching on, because what we might find is that with changes to JobKeeper payments, some recipients who were previously eligible for JobKeeper may no longer be eligible, or they might be receiving a reduced payment. So it may mean that some of those individuals become eligible for JobSeeker payments or other support payments from the government. What's happening with JobSeeker going forward is that from the 25th of September through until the 31st of March, the COVID-19 supplement is reducing. So it's reducing from the current rate of $550 down to $250 per fortnight. So that means that the JobSeeker payment per fortnight will actually decrease from $1,100 per fortnight down to $800 per fortnight. So still less than what JobKeeper provides, but more in line with what the partial payment is under JobKeeper. There'll be an increase in the income threshold. So this income threshold is the threshold at which recipients of JobSeeker can get the full payment. So the income threshold will increase from $106 to $300 per fortnight. So it allows individuals to earn a little bit more income from paid work and still be eligible for the full JobSeeker payment. And finally, in relation to JobSeeker, there are a couple of other changes. There will be means testing introduced in relation to that payment. And there'll also be a reintroduction of mutual obligation requirements. And basically, those requirements are that the JobSeeker recipients are actually actively looking for work and not turning down paid employment if it's available to them. So JobSeeker will provide an additional safety net for individuals who may not be eligible for JobKeeper going forward because either their employer doesn't show the same decline in turnover, or perhaps it's a reduced payment because they're only eligible for partial support under JobKeeper. So that covers the changes to the JobKeeper arrangements. Thank you very much for your attendance today. And once again, I hope everyone is remaining safe. And if you do have further questions, feel free to reach out to your BDO contact in your local office. And once again, thank you very much.